Okay, you guys, will continue working problem 5-1A on pages 255 and 256 in your text. We'll start back with the 13th. Now here's where it gets interesting. It says paid Hoagie Company for the invoice of the third less discount. Now looks like I got an issue here. There we go. Okay, so anytime it references an earlier date, you have to look back to that date for the amount of the purchase and the discount that was offered. Notice it's the 13th. We made the purchase from Hoagie Company on the 3rd, so we're within the 10 days. Okay. We'll do some side calculations on this page. Okay, on October 13th, we're paying Hoagie Company. If you look back to the 3rd, the actual purchase was for $9,950. Now, if you look on our journal page, we debited merchandise inventory. Actually, we credited accounts payable Hoagie Company for $10,170 because we owe Hoagie Company for that prepaid freight. But they're not going to give us a discount on the freight, you guys. They're only going to give us a discount on the purchase price of $9,950. So what we'll do is say $9,950, which was the amount of the purchase. And we're going to multiply that times the discount offered, 2%. Okay, so I'll punch that in here. Equals $9,950 times 0.02. So $199 is the amount of the discount. Okay. So we're going to receive a $199 discount on the purchase from Hoagie Company. But we still need to figure out how much cash we're going to have to pay out. So let's go back over here. We're showing that we owe them $10,170 purchase price plus transportation. We're going to deduct the discount from that amount to get the amount of cash we'll have to pay out. So $10,170 minus the $199. Okay, so I'll punch it in like this. Was the $10,170 minus the $199. I don't need that negative sign, sorry. There we go. Alright, so we're subtracting the discount from the total that we're showing that we owe them in accounts payable, and that gives us cash paid. Okay, so now we got to turn this information into a journal entry on the 13th. Well, the first thing we're going to do on the 13th, we're paying off this debt completely to Hoagie Company. Okay, so if we have paid them completely, then we need to take this entire amount off the books. We went on as a credit for $10,170 to accounts payable Hoagie Company. So it comes off the books as a debit for $10,170 to Hoagie Company. Now the accounts payable balance to Hoagie Company is 0 for this purchase. Okay, so we've zeroed that out. It's gone because we've paid them and settled the debt. Now, what did we give up? Well, we paid out cash of $9,971. We now have less cash. It's an asset that decreases on the credit side. So we're going to credit cash for $9,971. I believe, was that the number? Yes, $9,971. Okay, we debited accounts payable to decrease its balance to 0. Remember, it's a liability, decreases on the debit side. Then we credited cash, an asset that decreases on the credit side for the amount of cash paid out. Okay, but I know you're thinking, well, this entry doesn't balance, and you're correct, it doesn't. The difference is our $199 discount. So what we're going to do here, we're going to reduce the balance in the asset account, merchandise inventory, by the amount of the discount, $199. Remember, I mentioned earlier we want assets on the books at their cost. Well, we put this merchandise inventory on the books at $10,170, but it only ended up costing us $99.71. So to get that inventory on the books at its actual cost, we have to reduce the balance in the asset account by the amount of the discount. Now that inventory purchased on the 3rd will be on the books at $99.71 rather than at $10,170 once these are posted to the ledger. Okay, let's keep moving. Next, we have the 14th. Paid Taco Company for the invoice of the 4th, less debit memo of the 6th, and discount. Okay. Well, first we got, it references the 4th, so let's go back to the 4th. We made the purchase from Taco Company for $13,650. This goes with October 14th. That was the original purchase. Okay, but did we keep all of that inventory? You know the answer already. We didn't. We returned a portion of it on the 6th, which is also referenced there on the 14th. On the 6th, we returned $4,550 worth. They're not going to give us a discount on what we returned, you guys. So we're going to have to subtract that out. So it equals $13,650 minus the $4,550. That gets us to $9,100. That's the amount that we'll receive the discount on. If you look back to the 4th, the discount's written as 2/10. That means a 2% discount if paid within 10 days. So times 0.02. So this is equal to 9,100 times 0.02, a $182 discount is how much we'll take on this purchase. Okay, so let's go back and make our entry using this information. The first thing, if we've settled this debt, the first thing that needs to come off the books is the accounts payable to Taco Company. So let's go back and look. Accounts payable Taco Company went on the books as a credit for $13,650. We reduced it by the amount of the return, $4,550. So the balance left in accounts payable Taco Company, we've already calculated it once. Is $9,100, but let's do it like this. It's equal to what originally went into accounts payable for Taco Company minus the return, $9,100. Okay, now we're going to, that takes the accounts payable off the books, you guys. The liability decreases on the debit side. Went on as a credit, has to come off as a debit. Okay, now we're going to give up cash of how much? We didn't calculate that yet, but let's do. Okay, cash paid would be equal to our $9,100 so I'll just put it in here instead of trying to copy. Put in $9,100 minus the discount of $182. So this one's going to be equal to $9,100 minus the $182. That gives us $89.18 cash paid. All right, so that's how much cash we had to give up. Notice we subtracted the discount from the balance left in accounts payable after the return, not the original purchase amount of $13,650. So cash paid, or our credit to cash, is $89.18. Okay, and now we want to reduce the balance in merchandise inventory associated with this purchase by the amount of the discount. We want it to be on the books at its actual cost after what was returned. We decreased it for the return here. So we'll decrease the balance in merchandise inventory here for the discount. Which was, what was it again? Was that 182? And that should balance our entry. Okay. All right, we'll pick back up with the 19th in the next video. Thanks.